Hi, I'm Alex Jacobs and I'm going to be doing a weekly video YouTube blog. It will be about sort of big economic issues sort of during the week or maybe a bit earlier, just general big things that are happening. So a bit about me. I am very into real life economics. Now what does that mean? Well, so you've got the theory, and don't get me wrong, theory is vital, Keynesian economics, Greenpan, all these people are vital to economics because that's the basis. And that's exactly what I think of it as, a basis. See, the thing with economics is there's so many different problems and there is no one solution. Different problems need different solutions. And that's how it sort of relates so much to modern day problems. So that's why I'm really passionate about it. I think it's really interesting. There's so many different things and it's just vital for everyday life, really. Everything that we do is economical, really, if we look at it. So I'm going to talk about double-dip recession. Well, double-dip, whatever you want to call it, which a lot of economists are quite big on at the moment. A lot of them think there's a good chance. Now, basically what's happened is most economists have downgraded their GDP forecasts. If we look at JP Morgan, they've downgraded it about 3%, and Barclays Capital to about 2.5%. So, yeah, they downgraded it, and that's not great, but that's still growth. The bottom line is that's positive. So, let's have a look at the bad first half, where this has all come from. Everyone's been frightened. There's about three main things that have happened in the first 6 months of the year, which are the main reasons why people think there's a double dip. So we've got higher gas prices hitting consumers finally. This is pretty bad, but I'm going to come back to that later, about what the positives are. Another big one is the supply disruptions in car supply, auto trade. Now this is a huge industry in America, huge in Germany where there's so much trading, so that is quite a big issue as well, and I'll be coming back to that as well. And then we got business uncertainty caused by the default brinkmanship in Washington. Basically, there's been business uncertainty, and I'm going to come back to that as well. So those are the three main points, but let's have a little start with the main GDP report. And this is where it all started. Went from 1.9% forecasted growth to 0.4% first quarter. And that's quite big, but so we have a closer look at it. 2/3 of that was from lower inventory growth. Now, you're probably thinking, what is that? But that is a good thing, because when there's weak demand, that lessens the chance of cutbacks in jobs. It's a good thing in my opinion. Yeah. So, the other third of that GDP decrease was from sharply higher import prices. Now, I don't know about you, but to me that's hardly a sign of weak domestic spending. But it's resulted in a large trade deficit, and overall, obviously, it's subtracted from overall GDP. So, although the GDP, although overall domestic demand's only been up 0.4%, that's pretty much along the lines as was forecasted last year. It's only because there was bigger growth than normal that suddenly it's sort of a bad thing. 0.4% growth in these times is not bad. That's the thing. So, one of the two main things in the coming months will be consumers and employment, which really are key, obviously. Okay, so there is actually reasons for optimism. And as I said before, one of the reasons was business uncertainty from Washington. But they've actually been more positive in the last coming weeks, and that's coming to an end, which is positive. Also, another key thing that's going to help is the weekly unemployment claims have gone down, which is really good, because obviously it looks like there's less unemployment. Anyway, the other one, cars. Now this is really undervalued in my opinion. Cars are a huge industry, really big in America and Germany where there is huge trade, but this is quite key in the supply chain. So there was a report on Tuesday which showed quite a nice solid pickup from 11.4 million to 12.2 million, and oil prices are off their high, which is good, as are gasoline prices. So what that tells us is overall inflation has gone down, which in my opinion is one of the keys to eventual growth, because inflation always is a barn, let's be honest. Yeah, so that basically means there's more buying power, and home prices stabilising, which, as we know from past experience, is pretty key. Yeah, and consumer borrowing is picking up, which is actually not a bad thing. So there are a lot of positives. Now, certainly the loss of financial stimulus in the coming year will be felt through programs that are going to expire, but that's only about 0.3% of GDP, which, okay, it's a little bit, but that's not huge, okay? So the last big point I want to make is monetary policy. Now, I'm a big advocate of monetary policy. I think it's actually more important than fiscal policy. I know it's slightly edgy, but the Fed will not raise interest rates for the fiscal year 2012. That's what they said. Now, to me, that is sort of the key. The Federal Reserve is not going to raise interest rates. That shows great encouragement. And Barclays Capital actually think for the whole of the year that's going to happen. They're going to hold interest rates. So those are my main points. That's what I think. So let's have a little recap. So they're going to be stronger auto sales because the supply chain is back on track. High level of imports. Again, lower inflation. There's less uncertainty in Washington. Business confidence is improving. There's the dip in unemployment claims, as I said below. Lower oil and gasoline price again, based on inflation, absolutely key. Home prices stabilising, which is basically the basis for most recessions. If you look in the past, it wasn't just the last one. But people are very concerned, but they are stabilising. Increasing consumer borrowing. Yeah, now that is a big one. People borrowing again. Yes, you're thinking, that's bad, that's how the last recession, but no. When people can borrow, the banks, the mortgages, the lenders are happy. They have inside information, they know what's going on. That's a good sign. And low interest rates, as I just said, from the Fed, to me, is the biggest thing. Because that really means double dip does not look like it's on the cards. Anyway, that's not, I have no doubt there will be a double dip recession. I mean, there won't be. These are the facts. The economy is still, American economy is much stronger than people think. This isn't just some sort of Greece type economy. This is a solid economy, obviously the strongest in the world. And the infrastructure is there. And recent reasons that I've said have given a lot of hope. So that's my opinion. And there you go, that's the first video. Hope you enjoyed it. They will improve, obviously, as I get more experience. So that was a nice little taster. Hopefully you have some questions, maybe on a dispute thing to say. I love that. I'm always up for a good discussion. But yeah, anyway, just leave feedback and have a good one. Goodbye.